Morning. We are live. It is Monday, November 7th, and this is the deep dive with Keeping Current Matters. My name is Kate Rezabek, and I am so thrilled to be here with you this morning. As always, starting our week off talking about the most important topics in the housing market. And thank you all so much for being here with us. For our members who come back week after week, we love seeing you here. So pop into the chat, pop into the comments, and tell us where you're tuning in from this morning from all over the country. It's so nice to see everyone here. And of course, if you are new to the deep dive with KCM, thank you for being here. Thank you for checking this out, for being a part of this conversation. We always try to start the week off with what's most important. What are the topics that we want to make sure you have visibility to, you have answers for your clients? And that's exactly what we're going to be doing today. So I'm going to be sharing lots of slides, lots of visuals, some expert quotes, everything that you need to be that trusted advisor in your market. And if you'd like to download those, of course, if you're a KCM member, you can go to our member area and you can download those slides. You can see the replay of this recording. And then if you're new to KCM, it's trykcm.com. So you can go ahead and download those slides and have them, share them out on social. Like we said, be that trusted advisor, be that market expert, because more than ever, it is so important to really be able to have answers for your clients, to guide them through the confusion that's out there. There's so much happening in the housing market today. And we want to make sure that you feel like you can guide your clients to confident decisions. And we're going to talk about three really important things. There's a lot to pack into the next 10 or 15 minutes, but we want to cover three topics with you this morning. First of all, we're going to take a quick moment to talk about the Federal Reserve meeting last week and how that's impacting mortgage rates. So we're going to start there, and then we're going to go into the bulk of our discussion on an update on foreclosures. There's a lot of people wondering what's happening with foreclosures in this country, and we want to bring you the latest information that we have. And then, of course, we're going to wrap up today answering the question, or helping you answer the question, should I buy a home right now? And, that's a big thing on a lot of your clients' minds today. And while everybody moves through the home buying process at a different pace and for different reasons, we want to be able to give you the guidance to answer that question. If your clients are wondering, should I buy right now, as they see everything that's happening with mortgage rates, with prices, with inventory, they have a lot of questions, and we want to make sure you have those answers. So we're going to go ahead and get started. And as I mentioned, we're going to start with a quick update on mortgage rates. And as we all know, the Federal Reserve met last week, and they got together and they raised the federal funds rate by 75 basis points. And why is that? That is because it is all about inflation, and inflation is still high. We've been bringing this message for you quite a bit recently. And so what this means is the Federal Reserve is doing their best to lower inflation, to slow the economy. And as they do that, there's a downstream impact to the housing market. And so we know that the Federal Reserve does not they don't call mortgage rates, but their mortgage rates certainly do respond. So as they're raising the federal funds rate, as they're making moves to lower inflation, we are continuing to see mortgage rates rising. We're seeing that kind of soften demand. And at the end of the day, what we need to remember is that it's all about an inflation. And until inflation shows those signs of slowing, we're going to see high mortgage rates in this industry. And so I want to start by sharing this expert quote, kind of the reaction to that. This is from George Ratu from Realtor.com. It says, with inflation still running at a 40-year high and the Fed expecting a few more rate increases to combat, so they've nodded towards additional rate increases through the rest of this year, mortgage rates will experience upward pressure through the end of 2022. So that's what we're feeling. That's what your buyers are experiencing right now. It's really important to put this into perspective. We talk about mortgage rates and how they've truly increased pretty rapidly this year. That's kind of cooled the housing market a little bit. We're going to continue to bring you these updates, to bring you everything we have on mortgage rates as we continue to go forward. But I wanted to spend a moment just talking about the reaction at the beginning of this deep dive today. As we continue to talk about rising rates, as we talk about home prices in the housing market, a big question that comes up today is about what about foreclosure? So I want to spend some time this morning bringing you the latest updates we have on foreclosures. We've been talking about this for quite a while on why we won't see a wave of foreclosures coming to the market, but it certainly is a question that continues to be on everyone's mind. So I'm going to start with some historical data that shows us foreclosure activity by year. Now, this is from Atom Data Solutions, and it shows the number of foreclosure filings we had in this country going all the way back to 2005. Now, those red bars are years where there were over 1 million foreclosures per year in this country, foreclosure starts. And what we need to remember is that's a very different landscape where you can see those bars peaking around 2.8, 2.9 million foreclosures per year. We're not talking about that type of environment anymore. And what you can see here is the foreclosure rate it's dropped. The number of foreclosures in this country have dropped significantly since about 2010. And that's because at that point, lending standards changed and we got a more qualified borrower, a more qualified buyer in this country. And that has drastically reduced the number of foreclosures that we see today. And, one of the leading indicators of this, we're not going to be talking about this today, but delinquencies are one of the leading indicators as to what is projected to happen with foreclosures. And those are down in this country as well. So we're seeing fewer and fewer foreclosures every year because we have a more qualified buyer. So what does that mean for today? Well, let's take a look at this quote from Atom Data as well. It says, only about 214,800 homeowners were facing possible foreclosure in the second quarter of 2022, or just 0.4% of the 58.2 million outstanding mortgages in the US. So think about that for a moment. 0.4% of all the mortgages in this country facing foreclosure. So that's a very low percentage. And if you talk to a servicer or someone who works on the foreclosure side of the business, they're generally okay with about a 1% default rate in their portfolio. We're talking about 0.4%. So what does that mean? Well, that's incredibly small. We never want anyone to face foreclosure in this country, but we're certainly not talking about a massive wave of foreclosures coming to this country. And, a lot of people wonder, well, why is that? And I think this quote goes on to say it very well. It says, of those facing foreclosure, about 195,400 or 91% had at least some equity built up in their homes. Now, that doesn't mean that homeowners who have equity won't go into foreclosure, but it certainly does give people options. And really, at the end of the day, homeowners have the opportunity, if they are in a challenging situation, to be able to sell their home and leverage that equity. And that's a very different scenario than what we had when the housing market crashed. Now, I want to share another quote with you. This is from Rick Sharga of Atom Data as well, someone who we really admire and follow along in the industry. And he says, anyone waiting for a huge foreclosure wave will probably be disappointed by this report from Atom Data. He's talking about the foreclosure activity report. It says foreclosure activity was flat Q1 to Q2, and foreclosure starts dropped slightly from August to September. So not in a position to see a wave of foreclosures coming to the market. We talked about people having other options, and that is fantastic news. And, one thing we want to call out too is that the headline that we're seeing in the media are things like US foreclosure activity continues to increase quarterly, nearing pre-pandemic levels. So while both of these things are factually true, it can be really confusing today for someone who's just reading the headline and not going back into the data, not digging in to understand exactly what they're saying. And so this market is more critical than ever to really go beyond the surface level and dig in. And that's exactly what we're trying to do here is to help you understand what's the bottom line. The bottom line here is we're not going to see a pent-up wave of foreclosures. We don't have a flood of foreclosure inventory coming to the market. And, I think this also begs the question people wonder about, are we going to see a wave of inventory in general? And what's important to understand here is that housing supply is still historically low. So when we look at this inventory data, this is really powerful. This is inventory from the end of October, so just wrapping up last month. If you look at the same week in 2021, sure, we have more inventory than we did last year at that time. That's creating options for buyers. We have a little bit more than we did in 2020, but look at that red bar. We are down about 37% compared to 2019. So when we compare where inventory is today compared to a more normal market, we talk about 2017, 2018, 2019 being more normal markets, we are historically low. What does that mean? It means we're not seeing a flood of inventory coming to the market, and prices, that's kind of the big question on everybody's mind, are driven by supply and demand. And when supply is this low, prices are not projected to crash by any means. Now, we're going to continue to bring you pricing data, and that's a big part of what we're talking about right now. And we'll continue to do that. But as we look at the inventory data here, housing supply is still historically low, and that's driving where the market is today. I think this also leads to the question that a lot of people are asking: all this information, mortgage rates, prices, inventory, what's happening with foreclosures. It's making a lot of people ask the question, should I buy a home right now? And that is certainly on everyone's mind right now. And as the market expert, it is more important than ever that you're able to take this data, bring it all together, and formulate your market opinion based upon facts. That's what we're trying to help you do. We want you to have this national perspective. We want you to layer in your local data, because if someone's sitting on the sidelines and they're confused and they're not sure what they're going to do, they're probably going to pause their plans. But maybe they are in a position where they should be buying a home. And we certainly don't want to push anyone down that direction. It's not about convincing anyone, but it's about helping people make powerful and informed decisions based upon fact. And that's where your relevant market opinion comes into play. Because if someone's asking the question, should I buy a home right now? The alternative to buying a home, it's renting. And if you follow along with us, you've seen this many, many times, but rents are really skyrocketing. And, in our business, it's more important than ever to understand in our local markets, what does a 2-bedroom apartment rent for? What does a 3-bedroom apartment rent for? How about a house in our market? As you look at this data and you can bring this information back to your clients, you can help them make those powerful and informed decisions. Because when you get stuck in the rental trap, and so many people are there, and we know that people have been priced out of the market very recently as mortgage rates have been rising and prices are high. When you're stuck in the rental trap and you're continually paying more and more in rent, it makes it so much harder to step into homeownership, so much harder to save for that down payment, to really kind of build that long-term wealth that homeownership brings. And, helping people understand what are the benefits of equity when you own a home, what are the non-financial benefits of homeownership, that feeling of satisfaction and the American dream and that long-term wealth that you can pass on for generations. That is huge, because this is the alternative, this rent that is continuing to skyrocket. And it's definitely something that we want to help our buyers understand. We want to listen to their needs. We want to understand their situation, and we want to help them make an informed decision based upon fact. And, I think Odetta Kushi from First American says this really, really well, because as people are thinking about waiting, here's the bottom line. If you can find a house that meets your financial expectations for a monthly payment, and it is a good time for you to buy, then do that. And if you wait for prices to fall, but they never do, you may discover the hard way that the house you found a year ago that you really loved, that you could afford, but you passed up on, is more expensive next year. And that is kind of what we want to help people understand. If it makes sense for you to buy right now, great opportunity to do so. Because as we look at mortgage rates, as we look at prices, we don't want someone waiting on the sideline that could jump in now. Now, I'm not saying it's time for everybody, and certainly, finding that house and in that monthly payment range is a challenge for a lot of buyers. But that's where being that expert advisor and helping people make the right decision, what's best for their situation, understanding that difference between what does it cost to rent and what does it cost to buy is more critical than ever. That's where our job becomes so important. Because if we don't do that, what happens? Well, this is a quote from Parcel, and it says, in the absence of trustworthy, up-to-date information, real estate decisions are increasingly being driven by fear, uncertainty, and doubt. These decisions can be hugely consequential for consumers and businesses. So if someone's just reading the headlines, they're not digging in, they don't understand the full picture, they need you more than ever to help them make those powerful and confident decisions so they don't sit on the sidelines and wait when they may have an opportunity to jump in. And of course, making the best decisions our clients can make is mission critical. And we can help with that messaging. And that's where your job becomes so important, because if we don't get this information out here, then everything gets driven by fear, uncertainty, and doubt. And we certainly don't want you or your clients in that position. So before I open it up to questions, I want to share with you, we have a great webinar opportunity, how to bring clarity to the biggest questions in housing today. That is on Wednesday, November 9th, this Wednesday at 2 p.m. Eastern, 11 a.m. Pacific. I'll be on with Jack Goodall here from KCM, and we're going to be talking about all of these big questions. We're going to go deeper into mortgage rates, prices, forecasts, answering this question, should I buy a home? We want to see you there, so be sure to register at trykcm.com/webinar. We can't wait to see you there. So I'm going to pause here and Jessica, see if there are any questions that came through that we can answer this morning.
Hi, Kate. Yeah, I'm not seeing any questions come through other than from Kristen, who is asking if this is being recorded. And I just wanted to say again for KCM members that you'll be able to go and check out the replay and access all of the slides from the deep dive archive in your member area.
Excellent. Thank you so much. Thank you all for being here this morning. Hope to see you on that webinar on Wednesday. You certainly don't want to miss it, and we can't wait to see you there. Have a great week.